Hi everyone, this is Jason Burek of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. He has over 40 years of experience in the investment industry and has managed client funds for 37 years. He is currently the executive chairman of the board of directors for the Sprott group of companies and the chief investment officer of the Sprott. Thank you for joining me again, Eric Sprott.
Hey, Jason, good to be with you.
Now, Eric, why do you think the Wall Street still gives the Federal Reserve any credibility?
Well, that's a great question, and then you might even broaden it out and say, why do they give any central bank any credibility? Because there's probably more egregious examples, such as the Bank of Japan, than even the Fed. But I guess it's been built into our sort of DNA to think that the Fed can do these things that make asset prices move in a certain direction, and if you're following along with the Fed, that you're going to be duly compensated. And of course, one of those times is post the financial crisis when the Fed basically stepped in and bailed everybody out. And if you believed in that thesis, you had prospered for those first 5 or 6 years thereafter. Not so much lately, because people maybe are beginning to question it. But that's the reason I think that people believe they should follow the Fed and give it some credibility. I think the point you're probably getting to is that it's kind of wearing thin now, right? That, you know, they keep talking about, well, first of all, they used to have an exit strategy. Well, that topic hasn't even been mentioned for probably a decade now. They promised that we're going to normalize rates for however long it's been. It's been, was it 9 years since we've had a rate increase, something like that? 9 years. So it is wearing thin, and of course, the Fed is in a bit of a dilemma here because they keep saying, well, it's data dependent, and the data continues to suck, and therefore they're hamstrung in the sense that the data won't support it, but they're also hamstrung in a sense that I think an increase in rates would be devastating for an already very, very weak U.S. economy and, of course, the whole world economy, particularly emerging markets. So I think, you know, to your point, that the investing public is starting to see through the inadequacies of quantitative easing and negative interest rates and are getting a little bit dubious about the ability of the Fed to support the prices in the asset markets.
Exactly. I'm in complete agreement. I mean, the Federal Reserve keeps making new excuses for why they can't raise interest rates and normalize things. You know, they've talked about the exit plan. We do have an exit plan, but you know, there's the Fed minutes that have come out since 2009 or before, when the crisis was happening. You know, they didn't have an exit plan. And one thing, when I speak to regular mainstream Wall Street money manager types, you know, they look at the government statistics and say there's no inflation. Well, what do you call it when stocks, bonds, and real estate are going up like crazy, you know, since 2009, and the bubbles have basically been reinflated? So I guess asset price inflation is the good inflation, and that doesn't count as inflation then.
Yeah. Well, as you know, Jason, I would be of the view that inflation is in reality understated. And I don't think you have to go much further than looking at healthcare costs. I mean, if somebody did a real good study of healthcare costs, including the increase in the deductible, the increase in the copay, the increase in the premium, I mean, it must be staggering what the total cost increase is every year for the average consumer for healthcare. It could be, I'm sure it's double digits. And when it's already, you know, 15 to 20% of your budget, I mean, a 20% increase on, or 10% increase on 15% of your budget is 1.5% inflation. And of course, we also see rents moving up dramatically. So the inflation reporting by the, I guess it's the Bureau of Labor Statistics, I think is totally flawed. I don't believe it for 1 second. So, and I might also go back to the point, I think the reason they can't raise rates is we are propping up this economy on the back of housing and autos, which are made more readily available to people by these zero downs or zero interest rates. And, you know, it's allowed people to buy things that shouldn't really be able to afford them. So I think the minute you start raising rates, because those were the two things that helped you kind of have an economic um, stability, kind of allowed you to have some economic stability, would start falling by the wayside. And that those are the only two things that seriously rates impact from the positive perspective. And if they start going the other way, I think it would be very, very difficult to dream of any economic growth whatsoever.
Yeah, in order to keep this global Ponzi going, Japan, the United States, even China, they're going to have to do financial repression and artificially manipulate interest rates lower. So they talk about interest rates going higher, but I don't see them wanting to go higher. I see them wanting to go lower because the size of the debt keeps growing. And if those interest rates do go higher, I mean, the value of those assets, it's going to drop. I mean, we go back through financial history, and when the interest rate starts going higher, there's not a lot of asset prices that do very well for a long period of time as interest rates keep rising and rising and rising.
No, we're in a real dilemma here because essentially there's very little economic growth. As I mentioned, I think the three biggest things are cars, autos, and student loans. And student loans is basically throwing money at people that they hope will spend. In the knowledge that maybe in the future it negatively affects you, but let's just give them the money now and take our chances. And ultimately, rates going higher is going to be very significantly negative to the economy. I don't think they will raise rates. I think they say that to sound like they're still coherent there, but I believe the problems are way beyond their control. I mean, this whole balance sheet expansion and the toxic assets that they purchased. I mean, it's just been a ridiculous few years we've had to go through here in terms of all these central banks' policies of being willing to buy almost anything just for the sake of keeping their markets together.
Yeah, and Dave Kranzler of Investment Research Dynamics has been reporting that the reverse repos have exploded in the last 6 months. I think well over 400 billion in reverse repos in the United States, and the last year or two, currency swaps have massively exploded, whether it's in the United States, Japan, Europe, doing currency swaps with each other to maintain the current status quo global financial system, or China and its trading partners doing currency swaps with each other to set up the new financial system. So basically everyone's trying to put liquidity into the system and devalue their currency, it seems, to prop up asset prices and either maintain a system or transition to a new one.
Well, I mean, it goes back to the whole Keynesian thing, give them money and the economy will stay together, but obviously that hasn't happened. It hasn't happened. I mean, I'm shocked that China says that their GDP grew 6.9% in the quarter. It's very difficult to believe when you look at the, boots on the ground data that's available in terms of, steel shipments or car rail loadings or electricity consumption, all those factors. It's just not happening. And in fact, the Chinese are probably even more involved in their economy from a banking point of view and a fiscal stimulus point of view than anybody has. And now that I think they're going to pay the price of thinking that the central planners can hold everything together, which I've never believed that they could. And we see it. I mean, the classic example is Japan. I mean, it's since 1990, it's gone nowhere, and yet it keeps printing, and it's still going nowhere. I noticed their imports down 11% this last month, and Chinese imports were down, I believe, 23% in the month. I mean, that's a depression number. It's not a recession, let alone 6.9% growth. So I think that everybody's trying to hold it together, but when 70% of the people who are working age are repressed, and when all the savers are repressed, you have a future spending problem on your hand.
Yeah, I completely agree. And the global economy, it's just really amazing. It's a live science experiment from all these Keynesians, all trying to do the same type of inflationist and mercantilist tactics. My next question has to do with the politics of Canada. You guys just had a major election there. Do you think the new Canadian government will increase taxes on Canadian miners and oil companies?
Jason, as a Canadian, I should know these answers, right? But I got to tell you, I'm personally so fed up with politics. I just always imagine, no matter who gets elected in whatever country, in the first day in office, they talk to the head of finance, and the head of finance says to the new elected official, by the way, all those promises you made, we can't afford any of them, you know, and so like take it all off the board. I mean, I don't specifically study what politicians are going to do to the oil and gas and mining industry. I can't imagine that in this country, with the state that we're in the mining and oil and gas area, that anyone could imagine increasing taxes on it at this point in time. Perhaps if, you know, these prices got back to some kind of normal level, they may change some taxes because governments are always trying to find ways to make money. But I think the timing would be totally inappropriate today. So I don't even think it's not something where I think we're going to see some immediate tax on oil or gas in the next week or two, because it would just seem so ridiculous when we understand the plight of everybody in the natural resource business. So I think it's highly unlikely.
Yeah, commodities have been in a bear market for a while. Oil has had a big bust for the last 12 months. Gold and silver has been in a bear market since 2011. The base metals are in free fall now. It just doesn't seem rational to someone like you or me that they would tax this. But I mean, politicians, you know, they have their own justifications and they can rationalize almost anything. So hopefully, I hope you're right and they don't tax. But you know, we've seen in the past where politicians have tried to do it. I mean, at least in other developing countries, they've tried even when commodity prices are falling. Yeah. So hopefully Canada doesn't follow suit with that, because it would be even more job losses and even more mining companies, you know, in peril.
Well, Jason, one more thing I should say on that. You have to say something to get elected. Once you're elected, you don't have to do it. Because as you know, the politics, the voting is more important than what you actually do. So it's like everybody. You always promise something that everyone seems to think is universally smart, but it isn't universally smart. It might appease to the mass of the voters, but when you get right down to it, I mean, you're not going to sign the death knell of your own businesses that are supporting the country. So I still believe that those things are not likely to manifest themselves. The one thing I probably do believe in, you know, one of the popular things that the Liberals suggested was that they'd make some tax cut, I guess, for the middle class and raise taxes on the rich. Well, that's probably something that could happen. But that's a pretty easy policy to have, isn't it?
Yeah, I mean, the government's always looking for new taxes to layer on. Here in the United States, the new popular thing now in many different areas is 2% of value of the car per year you pay an auto tax, and most people don't even bitch at it. They just pay it.
Yeah. Yeah.
Well, weaker commodity currencies and currencies of developing countries that produce commodities are helping lower costs for commodity producers, but many owe onerous debts in American dollars. Are we looking at a scenario where many commodity producers go bust in the near future?
Well, I can tell you from a Canadian perspective, I mean, the gold price is a pretty good price right now. It's $1,530, let's call it. I think most producers are making money today. I know that most Australian producers are making money. I mean, a Mexican producer should be doing well with the peso having depreciated as much. Brazil, price of gold in Brazil is up 50% in the last year. So the countries with the weak currencies are doing well. The gold producers are doing well by that. So, you know, I don't see it as likely. I think some of the junior explorers who need money for exploration in kind of greenfields projects are going to have a very tough time getting it, and we're going to see a lot of these very, very small companies where, you know, guys had hopes that they could find something, won't get the funding because the values in the very near-term producer or the producer are so low anyway that what's the point of speculating on somebody drilling up some greenfield site on the hope that they might find something. So yeah, we'll see a lot of little guys probably go out of business here, but anybody who has a stout property today, I think ultimately they'll get funding. I happen to have a very positive view towards precious metals, and I think you can sense it in the market generally that it's opening up for good companies to go back into the markets and raise some money here. So it will be those projects that require a lot of money and too much hope where they won't get the funding.
Yeah, a lot of the miners that have debt have been working like crazy to pay off the debt. So they have been doing a good job the last 18 to 24 months cutting costs, but it seems they've been reactive. So they didn't anticipate metals prices falling this much, and they weren't proactive in cutting costs and running their operations efficiently. I guess they were putting more marginal grade ore into the mill when the metals prices were higher to give themselves more leverage and more revenue and cash flow and things like that. But on the way down, it's almost like they've been wily e. coyote chasing the manipulated paper metals price that is the Roadrunner.
Right. Well, I think the other big mistake is they all made major acquisitions at the top, and they vastly overpaid for it and took on debt in the process. And or they bought copper mines when you're supposed to be a gold company, and those things are these are huge transactions that if they go wrong, it takes a long time to right them. And I think that's what the fate of some of the bigger producers is, that they've made gargantuan errors, and it's going to take some recovery to get back to normal again.
Is Sprott seeing good opportunities for private placements and putting a lot of money to work in some of these companies in this bear market environment?
Well, I think there are lots of opportunities. I know I've been involved personally in some, where I bought, for example, the Jarrett Canyon gold mine out of bankruptcy, along with the debtor in possession. And I think that's likely to work out quite well. I've also made investments in some Canadian companies here because the valuations were, in my mind, totally ridiculous. Yes, our organization is always looking at providing either whether it's lending or equity to mining companies, particularly in precious metals. So I think there's a market there, and I see signs of it getting better, that there's probably more and more people looking at what's happened in gold and silver here, where they've had this small rally to start off with, but a rally in the face of everyone almost universally bashing gold, and meanwhile it's both gold and silver have moved up here. And of course, some of the data points we see on this demand supply side are quite encouraging. So as we look forward here, some of us imagine that there is some serious money to be made in this area.
Yeah, I agree. And I think the point, to quote Sir John Templeton, I think the point of maximum pessimism, Eric, was around where that gold as a pet rock story in the Wall Street Journal hit, because it seems right then sentiment just about, there were no more sellers after that. That basically just about cleared the market, and the market started to rise again.
I think there's no doubt a lot of people have sold out now. They just couldn't take it anymore. And, we see some smart investors stepping in here to buy positions or buy gold, or different general commentators saying, well, gold could be interesting here, or silver could be interesting. So you can see the momentum has changed here. And of course, with the change in price performance, it brings a few more unwilling souls into the market. So I sense that will continue to happen here.
Plus, as long as the Keynesians are in power, they're just going to keep trying to devalue their currencies. So like you said earlier in the interview, the value of gold and other currencies is going up. It's just not gold in U.S. dollar terms. But what evidence do we need to see before there's proof of a physical silver shortage?
Well, of course, we saw the issue with the mints, but they point out that's they couldn't get the blanks. And nonetheless, there was one data point we can take away from it, is the demand for silver coins went crazy. I mean, I think some of the months the sales were up like 300% and 400% from the year before. That's the demand side, okay? Now the blank supply side, yes, you could understand that maybe there's a shortage of blanks, and maybe there's not a shortage of 1,000-ounce bars. But I can tell you, Jason, I mean, I am stunned by the demand for silver in India. It was reported that August they imported something like 1,400 tons, and I think the number for September is going to come in around 900 tons. I don't think it's an official number yet. And what's interesting about that is we mine about 2,400 tons of silver per month. So when India buys 1,400 tons in the month of August. How do and this is a country that purchased a total of 2,000 tons 3 years ago for the whole year. For the whole year, we're going to go from 2,000 tons to 10,000 tons. They have about 8,000 more tons of silver, where the market supply is hardly grown, and that represents almost an extra 30% of the market. And I don't know where this silver's coming from. I really don't know. I suspect there's going to be a real supply shortage here. Maybe they're just getting the bottom of the barrel. But when I see the coin sales going crazy, when I see India doing what it's doing, when you realize what's going on with all these currencies. I mean, if you're in Brazil and your currency's fallen by 30%, or Canada, or even Australia, or all these other countries where the currencies are going down, if you'd owned gold or silver, you wouldn't have taken that hit. So you can see why people should be coming into this market. Maybe if from an American's perspective, you don't see the loss in purchasing power that all these other people are seeing around the world. And there's more people around the world whose currency is going down than there are where their currency is stable. So between the data points in gold that we get out of China, the data points in silver out of India, you see these movements of gold and silver out of COMEX, and the gold exports that come out of the U.S. that are strong, exports out of the U.K. that are strong, all, of course, ending up in Asia. You just know that the demand is being, in my mind, has always been understated, that we've always had a deficiency of annual mine production plus recycling versus demand, and I think it's getting more extreme. I love the fact that the Chinese government now reports on a monthly basis their gold purchases. Even though they're modest, it looks like their number will total something like 200 tons that we didn't even recognize before. 200 tons in a 4,000-ton market. There's a guy who now announces he buys 5% of the market that theoretically he wasn't in the market before. Well, where's the World Gold Council going to come up with that extra 5% of supply? Because they always say supply equals demand. Of course, they never put China down for any government purchases, even though most of us have suspected they've been purchasing those amounts all the way along. But now they got to put it in the table, and they got to find some way to, well, okay, who supplied those 200 tons, considering that mine production is going to be going down this year and undoubtedly going down next year, and probably in a secular bear market in terms of supply because of the low gold prices, the inability to get financing, and people canceling projects. So I think gold, when you look at it on a long-term basis, I mean, the supply is going to be coming down. I think the demand goes up, and we're going to be in a good situation here. And that is without a black swan. But black swans are out there for sure.
It's nothing but black swans. I see nothing but bubbles.
Well, anything can happen here, right? I mean, there's so many things that could, whether it's a financial black swan, like Glencore going down or something, or some country defaulting. There's so many things that are just, hugely weak economic numbers. Not that we haven't seen them. I mean, I find the numbers out of China, the import-export numbers are shocking. I mean, they're just absolutely shocking. Even we in Canada, we're in a recession now, Japan's in a recession. There's so many weak data points that the ultimate black swan for me is when some banking institution has to bite the dust, because I've always worried that the banks are way over-levered, that it takes very little change in the value of assets to wipe out the capital of a bank. And this year, we're not making any progress in the financial asset side, the bond market, the stock market. God forbid we ever go into a decline here, and all of a sudden when you mark to market, the capital gets wiped out. And that could happen in any number of countries, and of course one country leads to another country, and you can get this domino effect. So, and to me, the reason to own gold and silver is to get your money out of the banking system. That's exactly what you should do. And we hear that a lot of people of wealth consider that now. That what am I going to do if the banking system gets weak? We don't just have to think about the U.S. banking system. Try the banking system in Brazil or Greece or the Ukraine, or I mean, you pick your country. I mean, there's a lot of weakness everywhere.
Yeah, and the black swan in banking, Deutsche Bank, could be the one that starts to fall, make the others fall like dominoes, because we've seen this pretty large loss from Deutsche Bank, but obviously we've heard other people with their derivatives exposure in the past from Bankers Trust and things like that, and they were exposed to Volkswagen, and I think they had investments with Glencore, so Deutsche Bank could be, it's looking probability-wise, the bank that could start to topple the others. Do you think the collapse in copper and base metal prices will exacerbate physical silver supply problems?
Absolutely. There's no doubt that silver is a byproduct of zinc and copper, lead, zinc, copper, and some of these closures will affect the silver production, which is another positive. When you're looking at silver, there's always it's a little bit of a, not totally a precious metal, that a lot of the consumption is industrial. And when you expect economic weakness from a demand point of view, you have to expect there to be some weakness in industrial demand for silver. That has to happen. But by the same token, because a lot of silver is a byproduct of these base metals, you might get very much a commensurate decline in supply from that source. And I've always been a believer that when we see the economic decline, of course, the biggest concern always falls immediately back on the banking system. It's bad enough that you can't collect your oil and gas loans. Now you can't collect your base metal loans, and then real estate falls off, and all of a sudden the whole banking thing comes into question. And silver is such a small market from an investment perspective that any change in investing habits in silver, it can have an overwhelming effect versus anything that can happen on the industrial side. But you're absolutely right. We're going to see less silver coming out of the base metal mines this year and next for sure.
Yeah, the copper and base metal miners were drastically over-leveraged. They had hedges in place, but it seems now, they're desperate to sell assets at whatever prices and raise capital. I know a lot of these copper and base metal miners are trying to sell, gold and silver streams. I've heard there's a lot of articles on those. Bloomberg even covered it. Glencore is willing to sell these gold and silver streams as soon as possible. So it's very interesting to see, people, I haven't seen many articles in the mainstream talking about how, as this copper price has crashed and base metal prices have crashed, that this is going to cause silver supply problems down the road. Only people in our space who think the way we do are even talking about this.
Right. Well, unfortunately, we only have a select few people who think positively about precious metals, and mainstream just decides they don't like them, and they're not likely to write positive stories. But you're absolutely right, Jason. It's a fact that's playing out right now as we speak. With Glencore shutting down those mines, they lost some silver production. We saw, I think it was Fresnillo was shutting down some lead zinc mine that had some silver production in it. So we're going to see less silver production next year than this year.
My final question for you, Eric, is why do you think China, Russia, and other major developing countries haven't decided to pull the plug on the U.S.'s position as sole world reserve currency yet?
Well, that's, there's only so many ways to pull the plug. One would be just to dump all your treasuries, which, of course, Russia's effectively done, and China's in the process of doing it. Another would be is that if you do have all the gold, which China may very well have all the gold, and they would know where it came from, because there's only so many suppliers of huge amounts of gold, that would be very telling. But they may also just be playing it in the sense that I read articles this morning that, the IMF might conclude, I think it is in November next month, that the Chinese yuan would be included in a basket of reserve currencies, and maybe there's something in it for them to keep the whole thing together too, which there probably is. I mean, even China, who is strong from a production point of view, I mean they're kind of strung out financially here, and might think they have to play ball in the international financial community because they more than anyone else have levered themselves from a debt perspective versus their underlying economic capacity. So they might be looking for others to help out. So whether or not they want to pull the plug, I've always imagined that China has way more gold than they've announced. And if they did announce they had, some huge number of ounces, the ultimate conclusion is, well, they bought it from the Western banks, and the Western banks are lying to us. So I don't know if they want to play that card yet, but I think it's there to be played.
Yeah, I think they're just going to continue to accumulate cheap, way undervalued physical gold. I'm surprised. I guess they're starting a $60 billion resource investment fund. I heard that from Willem Middelkoop on one of his presentations, and he went to China in the last couple months, and then he did a presentation about his visits to China with some of their financial and professors and things like that. So it'll be interesting to see how China plays this going forward. They seem to be slow playing things like Russia, where they continue to add more gold that's undervalued each month. I'm just surprised, Eric, that China hasn't bought entire gold mines yet, or there's xenophobic laws in Canada, I think, that were changed in the last couple of years. China's only allowed to buy up to 50% of Canadian mining companies now. So I'm surprised they haven't done more joint ventures with more mining companies yet.
Sure. Well, I can assure you they're looking. I mean, we're in that trade, and they're looking, and there's some action. You're going to see more action. You can just see it. We have people in China as we speak discussing things like that. So I think we're going to see we'll see more activity on the side of the Chinese in the precious metals area.
Very good, and hopefully that means more dividends for Sprott shareholders like myself. Well, I want to thank you again for your time, Eric. I enjoyed our discussion. Please tell our listeners more about Sprott Money, where they can buy physical precious metals and your and your new ETFs.
Sure. Well, Sprott Money is a private company that I own that sells gold and silver coins. SprottMoney.com. If you have an interest, we have a storage facility there. And of course, we do have 2 ETFs listed that cover the major gold mining companies, precious metal mining companies in the U.S. markets, and one that does the junior stocks. And we're trying to put a more proactive, active investment management into those funds. And I think that the previous history of them was that we can calibrate them in such a way that they should give superior performance to other vehicles out there. And of course, we love our gold and silver products that are listed there. We've always thought that the PHYS, their physical gold fund, is better than the GLD, and our silver fund, PSLV, is way better than the SLV, because people can in fact redeem, and there's other tax benefits. So there's lots of products. I always encourage everyone to look at all the various ways of getting into gold and silver. I think that's the one way to save yourself in a sort of a crazy economic environment where we find ourselves. So just take a look at any of the websites, and there's all sorts of things there that might lead you to make the right conclusion.
Okay, great. Well, thanks again for your time, Eric. I always enjoy my discussions with you, and maybe I'll be back up in Toronto in the near future, and we can have a beer.
We'll look forward to that. Thanks, Jason.